Hi friends, this is the chart of Bank Nifty on a 5-minute time frame. As you can see, you need to enter. What are the common mistake while the traders will do is that they will not check the momentum in the market. They will should trade only if the momentum is above 60. Suppose if the momentum is above 60, then only you need to enter into a trade, or else you will need to enter in above 50 or 60. If it is above 60, you can see we need to understand the liquidity in the market. The sell-off pressures liquidity in the market, and see, is one more thing is that we need to maintain risk reward. What are the common the basic mistake? See, if you enter here, you need to understand. Are you an aggressive trader or a conservative trader? Are you a breakout trader or a pullback trader or a reversal trader? Okay. For the best is that here it is as not a pullback, so you need to keep when you go through 1 minute time frame, as you should consider the previous days previous day high, previous day low. These are the things, and one more thing is that suppose on a 5-minute time frame you need to check the as you can see, this is what happened over here. And when you are getting into pullback trader, if you should always enter into a pullback trade. Okay, this is a pullback trade and this is a pullback trade. Okay, and where you need to keep your stop losses. Okay, this is in break and we will enter over here. So we thought that is a pullback, but unfortunately what happened is it hit our stop loss. If the 2 second candle gives the closing over here, without seeing here and there, we should just exit our trade. We'll save your this amount of your losses. That will cut your losses. The risk is very important part of trading. Risk before trailing stop loss is just trailing stop loss. Whenever you enter into trade, always okay, it's no problem. Whenever you are entering into a trade, you should always maintain a stop loss. The risk reward ratio. If suppose you enter here, so too close cash close is closing over here, you just exit your trade. Don't hold the trade and anymore. And what happened is, one more thing is don't enter. And one more thing is you should consider the momentum in the market. If you just got enter at the trade, you should see the price action levels, the key levels of the price action. You should identify, you should mark it in a call out. You know, don't under the text, you should understand in the call out. You should give note it in the call out, such as whether it is a 1 hour time frame, within 1 hour trend line, or 1 hour horizontal line, or 50 minutes trend line. Or one more thing is that you should always, and you need to understand one more thing is that whether it is this one, which one you should consider. You should not over trade. Very bad, very bad. Only one trade is there. Very bad. You should never enter for the option. One more thing, you should identify the liquidity in the market. First of all, you should identify the liquidity in market. This is the liquidity, breaking the liquidity. See, this is breaking the liquidity, and one more, price action levels and risk management is the very most important to success, to maintain your profits, to maintain your profit. Risk reward is very much important. Okay, And one more thing, I'll just enter over here and skip the stop loss over here. Stop loss is very much important in a part of trading. And look, this is the liquidity trading. Liquidity trading, never ever enter in a pullback trade. No, other than the pullback trade. This is the pullback, and never ever enter. The common mistake is just seeing the market, just enter into a trade. And if it is not a pullback, holding the trade, losing trade, and converting into a losing trade. And then always consider the pullback trader. Because liquidity, you should always be liquidity in the market. See, this is the liquidity was broken. The you keep an eye on the momentum in the market on a 15-minute time frame or a 5-minute time. Okay, for the best it is the 15-minute time frame. For the 15-minute time, if the momentum goes below 50 or 60, keep an eye on the market and keep an eye on the liquidity. Whether the liquidity breaks and enter into pullback. Never ever enter other than the pullback trades, and don't trade all the days. There is no need to trade all that, but if you are having the losses, you just don't take the rest for today. Don't trade today. And one more thing is that what are the four common mistakes? And you should identify the levels. Previously, 5-minute swing level, previously 15-minute swing level. You should mark all over the previous day 15-minute swing level, previous day 5-minute swing level, and a day today's on around, if you are it is there, it is on 12 o'clock or 1 o'clock of today's same 5-minute swing level you should identify. And one more thing is liquidity, one more thing is momentum, everything you should identify in the market.